Hello and welcome. Let's take a look at the Bitcoin markets. Right now, it is Saturday, and it is the 18th day of March. And within today's session, it's interesting hearing a lot of the comments in the live Poloniex website. It's been a very laggy day, and I'm going to talk about that as well near the end. But a lot of the comments stated, oh, Bitcoin is done, it's over. And it's always the same old thing that I've been hearing for years and years about markets, that everybody thinks short term and that because this move is taking place, it's like the end of the world and it's over for this Bitcoin in this example. And if we're wondering why we get so many of these harsh moves, well, that's the exact thinking mindset. That when markets are in capitulation mode, people are in fear into large degrees and they pump these things down like wild. This has been going on since before pretty much all of us have been born, given that this was happening in 1929 with the stock markets back then, and even well before then, I could only assume. So therefore, it's the same thing when markets go towards new highs and extending them to massive degrees. And we're seeing that right now within the Dash chart. And I'm going to talk about that a little bit later on, but I'm going to have to refer to it a lot here talking about Bitcoin, because people are in the greed and the mania stage. And whether it's bullish or not, when something goes up like 800-900% in a relatively quick period of time like this, then that's going to result in a large sell-off at some point. Whether it's after a 900% gain, big sell-off, or a 2,000% gain, I can't state there. And I don't know how much longer this is going to be going lower, but it's going to get to a point, almost guaranteed, that a decent amount of funds very soon are going to be pulled out of Dash into Bitcoin. Keyword is profit taking, as that stage is definitely going to come into play. You're also going to have the stage in here where people are going to be like, yeah, I've been waiting for dips and it's time to go lower. There's people who have already been entering or going now to be entered because it's in this area. They didn't have a chance back here to buy at around or below 1,000. Now they do. And then there's also a wave of people waiting for it to come into these price area levels as well. And once it's there, they'll be ready to go. So I myself like the philosophy on selling when markets go high and buying when markets go lower. That's the method in which I like. That's just my preference. Everyone has their own. And that's basically how I see it within the market movements anyway. Now, this level here is in at 9.25, which is the highs from January. It's also 61.8% down from this low and this high. This one in here. Either way, it's going to be an interesting situation. It appears above it now. It could go down here. And when we expand this out to a weekly chart, it's got two further levels down, one at 807, which doesn't match too well within this level, although it matches well with here. And then you got this Fibonacci at 587, and it doesn't match that well, I guess, in here. I think what would be, and this one's a more key area, I think what would be more likely is before there's any major corrections in this chart that this is going to go higher. And I'm only saying that mathematically within Fibonacci because these lines usually end up working within key points. And quite frankly, it's not doing a good job of it. If, of course, this is where the Fibonacci numbers are going to lie when you confront a major low and whatever a major high happens to be. Because from this low period in here, after a declining 18 average band, situation where the band is flat, resistance established in here, taken out, thus turning the market from what was bearish, neutral, into bullish, and the bullishness has never ended. The 18 average tests have been in here. It lifted off, in here, the liftoff, then the band test in here, the liftoff, the band test in here, the liftoff, and now we're in the band test again. The key support levels, of course, as I mentioned, are 807 and 587. But it would probably make sense that there'd be, before any correction, that this key line may make it up here. And I'm just saying how a lot of times how the natural markets work out. I'm not trying to hype anything up. After all, we're looking at a market which I think can only do one of two things, and it cannot do a third. The third that it can't do is end up just staying within a whatever range of, say, like 300 and like 3,000. That's not going to happen. What's going to happen, it's going to either go way up or it's pretty much going to crash to nothing or close to such. And if it is going to nothing or close to such, what's the chances that it's going to top here or top at 1,500, 2,000, 10,000, 20,000, and so on and so forth? Meaning, even if it eventually does and you get decent profits before it ends up going to that oblivion area, then it would still work out as a winning trade. I think, of course, it still has momentum to make moves towards the upside, and it's in a situation now where it's both bullish and bearish to have a significant rally whenever this thing stops going down, and it's well below this 18 average. So we're going to be looking at 1,100, and the psychological 1,000 is probably key resistance areas, but the key number being at 1,100, which is where the band will eventually soon be declining towards. Be looking for a test within such as in a resistance area field. You won't be expecting for it to take it out, but it very easily can when it goes towards there. Because on a bearish level, it's very common after a big move like this to get some sort of pop before it's going to eventually go over, make a lower high, usually at a previous key support mark, and then, of course, go lower. And then bearishly, of course, or bullishly, excuse me, it's obvious that it's going to go higher because it's the only thing that it can do. And I think that will be it for this particular video. Poloniex. It's another thing that was going on is when I was about a couple weeks ago, what I wanted to do was just notice the amount of volume of participants that are on the site. And it wasn't mainly for what has been happening now, but it was mostly to see the times in which it's strong and weak, as well how the weekends and weekdays do. And my early observations was from a couple weeks ago that it was around 10,000 people that would be trading, and off hours was down maybe to 8,000, and off hours would be like 2 or 3 in the morning. So there wasn't much for off hours, as of course a lot of people in Europe and overseas will put the volume in for that time frame. But then I also noticed on the weekends that it really didn't have a major decline compared to the week. But now all of a sudden, the levels I've been noticing the last few days have been picking up like 14, 15, 16, all the way up to 20,000. So the traffic has doubled. And the bandwidth on their end is not the greatest, to say the least. And a lot of people don't like it on there, and I don't like it myself either. But now you got people talking about how their server's like totally done. It's Mt. Gox 2, all this type of stuff. And it's people playing on the near game, sort of like how everyone's saying Bitcoin is over, because over the last 72 hours spanning March 16th to March 18th, 2017, this has occurred. Will we be talking about these 3 days much, say in May or in December or in 2018 or 2037? Not really. And that's when you gotta look at the whole perspective to how this is going to go, how often this moves. And when you know people play in the fear-based mode when markets are going down like this, and in the greed-based mode when they go up, and they're still doing it, then the historical ways of how things move are not going to adjust and change much. They're going to still play by the book, if you will. So I'm going to end the video and have yourself a great rest of the weekend. Silver analysis will be coming Sunday morning. Take care.